Welcome to the Real P&L Show, where I share my real P&L on 3 accounts and I share my proprietary safe wheel options trade for free. Let's make sure I'm going to check my audio. So if you guys can put in the comment there that you can hear me okay, I would appreciate that. You can see I have a little bit of a new studio back here too. Yes, so also be sure to post any questions you might have. A lot of times I get questions that come in kind of at the last second. Jeff says audio is good. Thank you, Jeff. Thanks, Kurt. Yes, so if you have questions, try to get them in a little early because I know we're on a little bit of a delay, maybe 5-second delay or something like that. All right. So let's get started. Let's start with the earnings edge. How did I do with the earnings edge or what happened? Last week, you can see here all the trades that I've made with the earnings edge. You can see my P&L, $10,249. Started this account with $5,000. Last week, there weren't any stocks that fit through all the filters. So let's talk about that. So the last trade was Home Depot. You can see my record since I did an update 19-19-7. So 50-50 win rate, 861 on the win average, 491 on the loss average. You can see the returns through 2022, 2023 didn't quite keep up with the market, and 2024 actually outperforming. Well, let me put this in here. That's not the right number. The market went up significantly last week. Let's see what it is. It's 507.93. Okay, so you can see the market's up almost 7% this year to date, which is only not even 2 months. So it's on a pretty good run, especially since last November. I mean, the thing's up, I don't know, 20, 25% or something. Just crazy run in the last 3 months, 3 or 4 months. Okay, so you can see pretty much on 2024, we're pretty even. But overall, since I started running the EE earnings edge, up 105%. But the S&P since January 2022 is up about 7%. So it's been a long run, but a couple of years to just get back to even with the S&P 500 since the end of 2021. All right, so let's look at the Premier Level 5. So there was no trades here. So Premier Level 5 is down some. When there's this huge bull market, the Premier Level 5 underperforms, but it doesn't necessarily underperform too bad. 33,702. Let's look at that. 33,702. So you can see it's down. Okay. Approximate numbers 23 wins, 9 losses, 11 break evens. This is since April 8th of 2022. So you can see how the system outperformed there, underperformed in 2023, and then so far underperforming this year. But the drawdowns are about 1/3 the S&P 500. So on a risk-adjusted basis, this is probably still underperforming this year and underperformed last year. But you can see here 12.3% versus 24%. You can see there was a significant difference between starting April 8th and on January 1st in 2022, 24% versus 7. So yeah, you can see you're underperforming, but you see you have 1/3 of the drawdowns. And when we get into those sideways markets, grind down markets, crash markets, we're going to significantly outperform. So it's just a question of how you want to hold your money, how conservative you want to be. And overall, this system will outperform based on the back test too, all the way from 2015. Okay, so that's the PL5. I don't think I made any trade. Yeah. Actually, I closed a trade earlier last week, and it was for break even on the earnings edge. I mean, on the Premier Level 5. And you can see here the Premier Level 5, what I'm trading. I'm trading options on the ES and T-bills. Okay. You can see everything that I'm trading there. Let's get to the safe wheel. The safe wheel is going to be interesting today. So, safe wheel. You can see LI. You can see we're down a couple $100 year to date on LI. Look at LI. Oh, okay. So now it's under $40. All right. Let's look at the positions on that. Let's put that into the spreadsheet real quick. 67.17. That was down some. Okay, so again, looking at the safe whale, drawdowns are about half the S&P. You can see outperformed in 2022, underperformed in 2023, and then underperforming a little bit here in 2024. Overall, outperforming 34% to 7% since 2022. And you can see my P&L right here, right? Not hiding anything. You can see the actual P&L. Okay, so here, what's going on? Well, the rules are that if the stock gets over $40, which it's not over $40, it was earlier, but it's not over $40, so we're going to go ahead and stay with this stock, LI. If it was over $40, okay, now it's over $40. So it's kind of a question of when do I make my decision? I'm going to say that it was under 40 when I looked at it. So I'm going to stay with it. It's just right on the edge, right? So I'm just going to stay with it. I could have went to a different stock, but I've decided, well, we're close enough. I'm going to stay with it. We were under 40 earlier. So what I'm going to do is I'm going to look at my put hedge. Okay, so for two things, I got to ask myself. One, is it under 100 days? No. Okay, so it's good there. Two, is it close enough to the actual price? So it's got to be within 70%. So $40, I'm just taking my calculator here to make it quick. $40 times 0.7, that's $28. So this put hedge strike price should be 28 or higher. Obviously, LI had earnings and it's rising significantly here. So that's the reason that we're down, because the put hedge is losing. And my long call that I went with was 46.50 last week, and that was too far out of the money. And because we were going into earnings, that was super expensive. So the $5 long call was way out of the money. Okay, so that didn't help at all. But here we are. This needs to be rolled up. This is not close enough to the $40 level, this 23. So I want to get at least 80%. So 40 times 0.8, 32. This has got to be at least 32. So I'm going to have to roll my put hedge up. It's not close enough to the money. So I'm going to go with 32. So that's the first thing I'm going to do, is move my put hedge up to 32, maybe 32 and a half. We'll see what's available. So I'm going to right click here, hit create rolling order. So I can roll it. This is what I'm in. Right now it's just putting something in like a filler. But let's take a look at what I can roll it to. And let's get this stuff out of the way here. I want to go to 150. Okay, so I have a choice between 207 and 116. What's closer to 150? Well, 116 is closer, so I'm gonna roll into the same expiration, but I need to roll it up to the 32. Currently, it's at the 23. So let's go to the 32. And I'm going to put it in the same expiration, June. All right, so I'm going to end up here. This is closest to 150, so it'll probably only last for another couple of weeks, right? So it's going to cost me $135, it looks like. So I'm going to get rid of this one, and I'm going to go into this one, move it up closer. This is not good for the safe whale. Like, this is not like, I'm not making money here. I'm, when the market when the stock just goes up, up, and up, it's just it's not necessarily a good thing, but it is part of the system. I'm going to go in at $1.30. Roll this, see if I can get my put hedge up to where it needs to be. Okay, now it's at $1.42. Sometimes that market maker can see you coming. Okay, so it filled there. It looks like we got about, well, $1.35 on some of them and $1.39 on another one. Okay, so around $1.37, I guess, on average. So that filled. So now my put hedge is in order. It's close enough to the money. Okay. I have my long call. I already did that last week. So now I just need to run the traditional wheel. And let's take a look at that. What I want to do is sell a put in the nearest expiration cycle, the one that expires on Friday. I want to sell a put and I want to do it out of the money. What I like to do is go to, so I want to get at least 40 cents. I like to go where I can get at least 40 cents and then go one up. Okay, because the further out of the money, the safer it is. But I do want to pick up some extra premium here. So I'm going to sell this one, the 38. Things are pretty, the volatility is pretty elevated right now because they just reported earnings. So let's see if I can get 60. Sell one put, 4 days out. Yep. Okay, good. So that filled. Okay, so I collected $60 in premium. I'm out of the money on my put. My put hedge is protecting me now. It wasn't before because it was too far away. And yeah, I took a loss on that put hedge. Okay, so that is the safe wheel. Boy, it was really close whether I could have stayed with LI or not. It was almost a judgment call there. But when I first looked at it, it was under 40, so I made my decision right then. Okay, let's see if there's any questions. I do see some questions. I appreciate you guys letting me know about the audio being good. Okay. Sandra, are you and Mara good candidates for the safe wheel? Even if their market cap is only 11.8 or 5.3, I believe they pass all the filters on how to pick stock. I don't know, let's take a look. You said you see they have the liquidity. Good liquidity. The price is in line. Do I have that on my list? Let's see what else. I'll just look at the see if they're good candidates. The price is good. Oh, is it coming into earnings? Let's see. Earnings after the market today. So I would wait. I wouldn't start today. Well, the thing is the put hedge might be a little expensive right now. So you may want to wait till tomorrow with that one. And the other one, that was you. Let's see what else. Yeah, the put hedge costs. I don't know what the put hedge costs are on that you. Something closest to 150. So 144. And what is it trading? 32. Yeah, you don't want to pay over $4 for your put hedge, so you should be fine so far. Let me see. It's a little expensive. That one's got some volatility in it, doesn't it? Strike availability. Yeah, I think you would work fine. Just I wouldn't put it on today. I would wait till tomorrow. But I like it. It looks like it's pretty rocky. Like it was at $33, and then the day before was at 30, and it was recently 35. I mean, so the only problem you might run into is the same problem I run into with LI, is that it will possibly be out of the $20-$40 range fairly quickly because of all the volatility. But yeah, you can use that one. Let's take a look at the other one. You said Mora. Let's see if I can get that in here. these are another one. That's not liquid enough. 4 or 5 cents. I like to see 3 cents. So I would, I, I mean, you could use it, but that's one thing that it's not quite as good as some of the other stocks. But these are really, you're talking about stocks that have a lot of volatility. And the problem with those is they'll come out of range quickly. And then you'll be going back and forth and, being in and out of different stocks a lot, which is probably not that bad of a thing. I like to stay with one stock for a long period of time. Okay, next question here. RH, when checking the long call on Friday, if the call is not in the money, but close to at the money and has some value, would you sell it? Yes, I would sell it for whatever. I would sell it even if it has no value. I would get out of it no matter what. So when it's Friday and it's time to get out, I usually about 30 minutes before the market closes. I'll get out of it no matter what, because I don't want to be long that call. They might assign me shares. It's always possible to get assigned shares. So I want out even if there's no premium. But if there is premium, I'll definitely take what I can get. Jonas, I couldn't roll a long call Friday because I couldn't find it for $4 to $6. What should I do now? Okay. Can I reopen the wheel? Oh, okay. I would. You can. I used to buy those long calls on Monday. Today's Monday, so you can, get that long call today. Find it. I was able to find it. Mine was what, 46? 46.50. I was able to get the 46.50, and trade price was $7. But I also closed out my other call, so I guess I had to pay a little more to get to it. But typically, I don't like paying $7. I'll pay $6. But if you had to trade it today, go ahead and trade it today. Some guy, what's up? Jeff, for a $10,000 to $15,000 account, could you use a higher price stock like 30 to 50 instead of 20 to 40? Yes, but I haven't back tested it. I would say more like, okay, so $20 to $40 stock is $5,000 to $10,000. So maybe you can go 40 to 60 with a 10 to 15,000, because if you get assigned 200 shares of a $60 stock, how much is that? $12,000. So that's kind of where you're limiting yourself. If you have 10,000, you might not have enough to make that happen, right? So 30 to 50, yeah, that might work too, because $50 viewers assigned 200 shares at 50. That's what, 10 grand. So yeah, that might work. I haven't back tested it that way. That's just a calculation off the top of my head. So you definitely want to back test it. Now, so instead of 6 puts, could you get away with using 3 put hedges, sell 1 put and buy one $10 call? I would, if you're going to, let's see. So you're going up. So you should be able to do 6 put hedges and 2 puts. So I wouldn't sell 1 put. Okay, I wouldn't use 3 put hedge. That's just the same thing as using 10 to 15 or less than $10,000 when you're using 3 put hedges and selling 1 put. But you're at the $30 to $50 range, so yes, you should do that and buy a $10 call. So your question is, are you going to buy a $10 call instead of $5 call? Yeah, actually, that probably makes sense to me. What you come up with. Again, you got to back test it, but yes, it seems to make sense. Simon, hi Carl. You adjusted put hedge at 80%. I thought it was 70 when adjusting, 80% when opening. Yeah, so it was 70, right? That it didn't. I tried to see if it fit within the 70, and the answer was no. So when I put on a new put hedge, when I did a new open, a new position, I went to 80%. Didn't I go to 80% there? Um, yeah, so I got what did I get? The 32, and that's 80% of 40, right? 4 times 8 is 32, yeah. So yes, what you're saying is correct. Garrett, if LI was marginally above 40 and stabilized, would we change to another stock no matter the P&L? Yes. Yeah. Let's say it was at $41. I mean, it's clearly above 40. I would have gotten out of it, sold everything on LI and started over with a new stock. I almost did that. It was right on the edge. What's LI trading at? $40.07. Yeah. Jeremiah, Google credit spreads seem decent. Okay, I'm not sure. We're not trading credit spreads here. That's more of a Tasty Trade thing. Steve O says, I miss DraftKings. Yeah, me too. I miss Macy's. And Macy's is almost $20. It's coming into earnings. Maybe it'll pop up over 20. I can get back into Macy's right here. Okay, don't see any other questions or comments. So good questions today. Oh, here's another question here. It's from Sandra. What tool do you use to backtest the strategy? I use OptionNet Explorer. What I found is OptionNet Explorer seems to be the best software that you can backtest out there. It's a manually backtest software. There's some out there that are not manual, but you don't really learn if you run automated backtests. You learn when you run it manually. Jeff, on my earlier question, I was just thinking of ways to scale the safe wheel, avoid the high transaction costs, I see, and stick with the 3 put hedge and the higher price underlying. Yeah, backtest it. It seems like a feasible idea. Yeah. I've been able to find enough underlyings that fit within that $20 to $40 range. They fit within the parameters. So I'm never at a loss. Like if I had to go to a new stock, I could find one. So as long as I can do that, I'm fine staying within that $20 to $40 range. But you do have making a point that when you start scaling up, you're going to have a lot higher transaction costs. So there might be an advantage to going to a $40 to $60 stock. Yeah, I can see that. Some guy, the 116 DTE versus the longer DTE. Why not take the longer DTE? Well, I just have like a rule of closest to 150 DTE. You could take the longer DTE. The problem with the longer one is if you start getting out too far and the underlying moves down significantly, the put hedge is not as powerful because it's too far out. And so when you get a big move, the option doesn't move with the stock. And so I want to get to a level to where at least when the stock moves, so does that put. That put goes up significantly, as opposed to it just goes up a little bit, because I want it to cover if I'm long 200 shares. So that's why I don't like going out too far. Okay. All right. Well, one thing I always like to say, if the P&L is not real, what else are they trying to conceal? I'll be back next week. We'll see you then.